Hello, everybody. Welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us on this hot summer weekend here in the Pacific Northwest. So I thought we would talk a little bit about asset allocation, where we are in markets, and where we think we might be headed in the relatively short term. So Josh is going to talk some more about this, but the S&P is hovering right at that all-time high we saw in February. We haven't closed above it, but we've traded intraday above the all-time high, which is crazy considering what's going on. We still have, close to 30 million people unemployed in this country. But as we have talked about in the past, the government has taken the place of the consumer, and markets continue to believe that's going to be true. But there are some consequences that are happening in the market as a result of all of this stimulus and what's happening to the dollar, and why certain asset classes are doing better than others. So the only free lunch in the investing world is asset allocation. Is to have a diversified portfolio that is globally diversified, and that's exactly where we have your money, and we think all investors should be globally diversified. It's been very difficult to be invested overseas for the last decade, but as we've seen lots of stimulus come out of the United States and lots of spending and deficit or debt happening, we're seeing the US dollar weaken, which means international stocks are doing better. There's other parts of the markets that are doing well too. So large cap US has dominated the performance over the last decade, but we don't think that's going to be true going forward.
The biggest addition to our portfolios back in March was small cap value. Kind of had some fits and starts there, but the last 3 months, small cap value is now up 30%. It's outperformed the S&P by almost 10%. So you're really starting to see small caps are more specifically levered to the reopening trade. A lot of you probably remember back in June 8th when small caps were just absolutely ripping. As the reopening sort of slowed down, there was small caps retraced quite a bit of that upside. Now here a week ago, small caps are back to above the highs of June 8th. And so we sort of expect small cap value to continue to outperform. On a relative basis, it still remains very cheap compared to large growth and some of the names that have really driven the performance of large cap stocks as of late. Other thing that we wanted to talk about really, that this Friday, all of a sudden there's some signs of life over in the bond market. 19 basis points higher on the 30s this week, 16 basis points higher on 10s, on 10-year treasuries. That actually means that the yield curve is steepening a little bit. So good news for banks, and specifically good news for small cap value, as it's pretty heavily weighted towards financials. And really, if we're going to actually see a sustainable market recovery over time, we need financials to participate in that. And a healthy financial sector is very crucial for a healthy economy over time.
So remember, we're globally diversified. International has been working. We think that's going to continue to happen as the dollar continues to weaken, as we have more stimulus coming out of the federal government and the Federal Reserve. Small cap stocks have led the way on this market snapback from March, and we think that's going to be true on a longer term basis, and we have exposure to that. We obviously have an election coming up, and we are starting to get those calls that, oh, the president's going to get reelected, I don't think I should be in the market, or Biden's going to get elected, I don't think I should be in the market. We've had seven Democratic presidents and 7 Republican presidents since the Great Depression. And if you overlay those administrations over the S&P 500, you will see that it doesn't matter who's in the White House. Thankfully, we have a system that works, and you need to stay invested. Investing is not a binary decision. Yes, there will be volatility around the election, but over time, for investing, it's not going to mean a whole lot of anything. And I know people disagree with that, but the data shows pretty definitively that who's in the White House doesn't matter long term as it relates to your investment. So that is our e-news for this week. If you have questions about your situation or want to talk about anything that we just talked about as it relates to your portfolio, call our office. That number is 800-743-0988. We will see you back here in 2 weeks.